Hello and welcome to the Cryptocurrency News channel. So, CZ has some words of wisdom on why FTX failed. Now, we could always guess, and we could pretty much guess correctly that they were over leveraged, but CZ has two big lessons, and they do actually tend to go around borrowing and leverage trading. So, basically, CZ said never use a token you created as collateral. That's right. So basically, you can't use FTT as collateral because you created it. Because if your company starts going down, then you're out of luck because your coin's going to go down and you won't have any collateral and you will get pwned, which is exactly what happened to FTX. As FTT went down, basically they had nothing left. So don't borrow if you run a crypto business. Don't use capital efficiently, have a large reserve. So you actually do need huge reserves if you run a crypto business because of the fluctuations and the volatility in price. Now, this is a lesson for companies as well as individual investors as well. Basically, this translates into don't leverage, or at least don't leverage too much. Obviously, most of us don't create tokens and we won't use that as collateral, so that doesn't apply to us. But don't borrow is a direct warning to basically using leverage or too much leverage. Basically, when you're using leverage, you're borrowing someone else's money. Same thing with a lot of derivatives trading. So basically, CZ is saying, hey, don't play derivatives too much. Yes, Binance makes a lot of money from derivatives, and that's why they do, because people don't really listen to that advice. Trying to use capital too efficiently will land you in hot water as soon as things start going bad. Most people have far less reserves than someone like Sam Bankman-Fried. If you don't have reserves or you can't add collateral, you can be liquidated very, very easily, especially if you're trading in high leverage. If you're doing leverage, I would say 3 to 4x, maybe 5x is the most you should ever do because of the volatility of crypto. I wouldn't mess with leverage at all. I wouldn't mess with margins at all, and I wouldn't mess with derivatives at all. Sam Bankman-Fried probably got margin called into oblivion. And Michael Saylor, if Bitcoin drops drastically more, could have the same problem. But Saylor has so much money that I think he can easily withstand this. But the thing is, like, if you run a crypto business or if you're just trading, you shouldn't really borrow all that much, and you should always have more collateral on hand. Now, the thing is that collateral should not be other cryptocurrencies. That collateral should actually be USD because, yes, USD does suffer from inflation. We all know that, especially in the last 2 years. But despite suffering from inflation, it's not going to go down 30, 40% overnight. It might go down 8, 9, 10% a year, but it's not going to go down 30, 40, 50% overnight. So if you start getting margin called, that USD will still be pretty good in either shoring up your collateral or bailing you out. And he's topping it off with saying Binance has actually never used BNB for collateral, which is smart, and they have a huge safe fund. And the thing is, like, we've actually confirmed that Binance has a pretty big safe fund because Binance has actually used that safe fund for hacks and other things, meaning that, yeah, they have like over $1 billion in safe fund, which makes them a lot more secure than something like FTX. So essentially, like, don't borrow to run a crypto business. Don't over leverage if you're an individual that's trading because that could really, really screw you. Don't think too much about using capital the most efficiently. Just make sure you are safe because the crypto market is an incredibly volatile one. And based on that nature, you shouldn't be like trying to maximize your efficiency. You should be trying to maximize your safety at times. So that's the news for today. Let me know what you think. Like and subscribe. Hit that bell notifications button. Thank you and have a nice day.